Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning on February 11th. I think we're in the bounce phase. So we're in this bounce. To this point, it's been kind of par for the course. It's been solid, not terrible. It's not like we bounced for, 4 or 5 days and then rolled right back over. At the same time, we're also not, powering ahead with blast off indicators and things ripping ahead to new highs or anything like that. We just seem to be in sort of this middle of the road 3 week bounce so far, with the major indexes recouping. The Nasdaq's recouped about 45% of its decline from November. The S&P more like 60%, small caps more like 40%. So it's kind of in that mid range. Okay. At this point, nothing's really changed from my standpoint, which is sort of a position trader. The intermediate term trends are down, whether you're looking at the major indexes, the growth oriented indexes and funds like I like to focus on, especially nowadays. And just even on the NYSE, I saw this morning 58% of stocks are below their 200-day lines. Now, some of that is interest rate sensitive stuff, but some of that is also, there's a lot of banks and oil stocks in the NYSE too. So there's nothing really has changed here. I'd say we're in this bounce. I'd say the odds favor we're in a bottom building process. But whether that is the case, or we have another leg down, or we kind of get our stuff together here and go forward, I think the next 2 or 3 weeks will be key. We've had a couple shots across the bow here I'll talk about in a second. So if we can steady ourselves and get going, it would be a positive sign. But simply put, I would just say the onus is still on the bulls to kind of keep the recent bounce going, to have some more stocks react positively to earnings, to have some real legitimate setups here down the road. So far, so good, but nothing has really changed. In Cabot Growth Investors model portfolio, we haven't done anything. We're still 2/3 in cash. I'm not opposed to putting maybe 10% of that to work in a couple small positions. Say if the market does hold firm and get going again here in the next week or two. But in terms of any major buying, like I said, we're going to need to see the trends turn up. At least I'm going to need to see the trends turn up, some stocks really set up properly, and go from there. So far, so good, like I said, but there's more work to be done. Okay, without any further ado, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So, day to day, things get wild, and you can just see these daily bars on the NASDAQ. Just a lot of gaps, a lot of news, a lot of inflation talk. And that's one thing I forgot to mention is I am encouraged with the fact that, as opposed to 2 months ago, hey, now it's inflation. What's the CPI doing? I saw something today that one investment house, might have been Goldman, said like 7 rate hikes is going to come this year. It's ooh. So there is a lot more bad news, which from kind of a contrary point of view is a good thing, and not unusual. But to this point, you can just see nothing's really happened here. Here's the NASDAQ. First decline, sort of second decline, and now we've bounced. But we're still kind of hanging around. This green line is the 25-day moving average, simple. Still well below the 250-day line. So, like I said, it's good. It's good. I'm not throwing stones at it. It's certainly not, it could be a lot worse, you know what I mean? But I also wouldn't say it's, changed my mind that says, oh my God, this January 24th low was the low and we're just going to go higher from here. I hope that's the case, but there needs to see more evidence of that. Now, the S&P 500 New York Composite looked better. That's recouped. You can see, first of all, this the first leg down wasn't as vicious here in November, December. But also just it's recouped about more than half of this overall decline here, basically to start the year. Hanging around the 25-day line, though. So you really can't say, at best you can say the intermediate term trend here is sideways. New York Composite's probably the strongest one. Again, banks, oil stocks, commodities, more of it than that. But again, no one's making a ton of money here unless you've been buying the last few days. And even then, it's just, nickels in front of a bulldozer. And just to round it out, IWM, the small caps, kind of worst of all, and the mid caps kind of in the middle here. Again, nice bounce, but we're kind of right into resistance. This is what I mean. I think going back, let me go back to the NASDAQ. This day right here, I don't want to get too micro. This was the Facebook earnings gap down day, and the market got hit. And then yesterday, Thursday, February 10th, was the CPI was really hot, which I guess, I don't know, the market was actually doing okay during the day and then sold off at the end. So, you kind of have this 2 shots across the bow. Can the market kind of hang in here and then push higher in the next couple weeks, maybe create an intermediate term green light? I'm not, even if that happened, I'm not saying there'd be a ton of setups out there, but that would be something that says, oh, okay, maybe we did flush out most of the weak hands during this sort of crash phase. Okay, that's what I'm going to be kind of watching for going forward, because a lot of these indexes and stocks have rallied but they've rallied right into resistance. Okay. So, they can go above it for a day or two, but do they go above it and pull back? Do they just melt down? Do they just power ahead from here? And yesterday's inflation worry is a big shakeout and we just kite higher. We'll see what happens. But that's kind of what I'm thinking here the next week or two that I'll be keeping an eye on. The growth-oriented indexes, it's funny. We're actually seeing, I don't want to say a rotation back into growth, but there has been a little bit more relative strength lately. And I don't just mean they've bounced more because they went down more, although that's part of it. But even as the major indexes are kind of flattish this week, like the S&P and NASDAQ, some of these are up 2, 3, 4% on the week. Still not positive, but a good start. So here's QQQJ. Again, you kind of had, this was your Facebook sell-off here, but you can see how it's much higher now, even though the NASDAQ isn't. So, small signs of relative strength in some of these things. But as you just kind of run through them, this is IWO, small cap growth, still pretty buried. FFTY is the IBD 50 fund, sales and earnings growth. This one really hasn't bounced at all. The IPO fund, which is a little bit more like, it's not like the ARK fund, but it kind of trades like it a little bit faster moving. This one has perked up. So above the 25-day line, but we need to see these things hit 5-week highs for an intermediate term green light. Right now we're dropping off days up here. So we're going to need to see another, at least couple of really good days on this, but also, the other indexes to conclude it. So like I was saying, it's a good bounce. I'm encouraged. I like the fact that sentiment is still kind of crummy, even though we have bounced, which is kind of a change. Usually as soon as we get 2 days up, it's, why aren't we buying this and that? Now it's kind of like everyone understands that the Fed is going to be tightening. They know the reasons for it, rightly or wrongly. So we'll see how it goes. But right now I just think let the market prove itself. If it does, we start taking some baby steps into the market. If not, obviously we'll remain defensive. Other stuff, just kind of running through. This is really, I'm just watching the same stuff that I've been talking about the last few weeks. This is XLP. Interestingly, it's right on the 50-day line here. I wouldn't read too much into the 50-day thing, but I'm still looking to see if this can keel over a little bit. Now, it's been underperforming a little bit during the bounce phase. You can see the last few days, but nothing big. You wouldn't mind seeing, say the market did steady itself and get going here the next week or two. If XLP really tanked, I think that would be it's a secondary signal, but I think it would be a good sign. The other thing, just on the sector front, I just wanted to point out, which will lead me into individual stocks. You can say the inflation theme. I mean, the inflation theme is kind of obvious here, but I do like the look of some of these commodity names that, like a lot of stocks, to be honest with you, cyclical names, they really didn't do anything. They had this blast off in November 2020. I've mentioned this 100 times. They had a multi-month run to new multi-year highs, but they've just gone straight sideways here for whatever, 6, 8, 9 months. Depends on the fund and stock or whatever. But this is XME, which is mining and materials. And we're just seeing this, big dip. It looked pretty good right here. It got hit with the market, but as soon as the pressure came off the market, this thing's really run right back to new highs, okay? So I do think there could be some opportunities there. And, again, I'm not like an economic cycle guy, but they're kind of late cycle sort of plays. On that note, I kind of find this interesting. This is a few names and sort of loosely in that group. So this is Nucor, which I've mentioned before, and I'm, again, it had this run. It's been out of favor for years. And then it kind of set up this base, had a lot of tightness, a bunch of weeks up in a row, blah, blah, blah. Big earnings and cash flow, of course. And then it got hit on, I don't know if that was earnings or not. It was the market and probably, I guess it was just the market. So it just looked like a complete breakdown. It, wipes out below this low and everything. Well, now that's kind of maybe looking like a shakeout. Now, earnings estimates are way down here the next couple of years, although still pretty elevated. Still think they're going to make $7 next year. But even so, you can just see the stock's been kind of smoke up a chimney here, right back to its high. So I find that action kind of interesting. It's a little bit of a lone ranger in the group at this point, but I do find Nucor interesting. Again, there's more to prove here, but maybe if it kind of broke out and pulled back or shook out or something like that. Freeport-McMoRan, the challenge with these is they're all over the place because a lot of them, they got hit. This is FCX. Again, this one had a nice, huge run, massive run, and then a nice consolidation here. And maybe it needed a shakeout. Maybe it needed something to kick everyone out. So the market's getting killed. And what does this stock do? It goes from 46 to 35. Well, that stock's done. Well, now it's come roaring right back. It's not a high odds setup because the stock could just do this, and it's hard to take a good sized position in that case. But if these things could calm down up here and then try to break out down the road, it's already got earnings out of the way. FCX is kind of interesting. Alcoa looks great. The stock It already had earnings. Its decline in January is very well controlled. Just hit the 50-day, and now it's just boomed to new highs. A little extended here, but AA looks great. I think I've mentioned Starbulk. This isn't the materials; it's the guy who ships the materials. Okay, so it's all the exciting stuff. If it falls on your foot, it hurts, sort of thing. But nice multi-month base. Again, you had this big run up, multi-month base, shakeout in January, and now off to the races. Good volume here. They do have earnings next week on the 16th, so buyer beware. But I'm just saying the chart looks pretty good. Mosaic, I will say it's interesting. Mosaic. Let me mention CF, because CF has actually acted better in general here. It's a little weird to me here. I'm not saying it's bad. It's right near its highs. So, I mean, it's certainly not bad. We have it, I think, in top 10. But you see how volatile it is on a day-to-day basis as opposed to some of these other things that are just sort of straight up. Mosaic is in the same group. It seems to be acting a little bit better recently. You can just see here with some accumulation here to new highs. They do have earnings on the 22nd, so just FYI. And then we're still seeing some some oil stocks. And this is actually more natural gas. This is Coterra Energy, CTRA, which is it's the old Cimarex and Cabot Oil and Gas, no relation to us combined. I think I mentioned this last week. Nice kind of consolidation here. It pops to new highs. And again, what you're kind of looking for with some of these is it shakes out a little bit, but on a on a day-to-day basis, oh my God, it's down 4%. But it hangs in there on the chart. Now it's bouncing back. See if it can tighten up maybe, but that looks pretty good. Elsewhere on the growth front, I think you're starting to get the wheat separating from the chaff just a little bit, okay? This is Datadog, DDOG. It's by far probably, I don't say by far. I don't want to make a blanket statement, but it looks pretty good, okay? Breakout here a few months ago. It had a nice run up, but it wasn't like it's been running for, 2 years. Sharp decline, but not that bad given what was going on with growth stocks to the 200-day line. And now, boom, boom, boom. And this week volume on earnings is very good. And now it's back to just 11% off its high. Again, you're kind of gapping right into resistance here. So I can't say these are, this sort of pattern is not high odds to me. Doesn't mean it can't work. I'm just saying it's going to be subject to wild moves. But there's no question, just relative strength-wise, Datadog is probably should be on your watch list. Zscaler is another one. They don't have let's see. They do have earnings on the 24th, but back above the 200-day line and actually probing above the 50-day line here. We'll see what happens. I do think this, not to be inside baseball, but this 3-day decline right here was so ugly. It's probably something that sometimes you call it candle resistance, whatever. It just means there could be a lot of people in here that want to sell that haven't sold yet. Okay, now a lot of them probably got shaken out on the eventual decline, but let's see what happens as the stock approaches, 300 or whatever. And then you have Snowflake, which I do think at some point in the future, I think Snowflake's going to be a big stock. But whether that's now or next year or 5 years, or I'm totally wrong, I mean, who knows? The stock this is one of these names, 400 to 250, call it. Now it's back to 310 or whatever. So it's bounced nicely. You've got some volume in here, so on and so forth. But it has work to do. So we're just kind of flagging these. The ones that go like this and they haven't bounced at all, I mean, those I would be careful of because if we do have some sort of retest or whatever, those could really get hit. At least with these, you kind of feel like somebody's been stepping up and buying them and drawing lines in the sand. So those are 3 growth stocks that I'm watching. In terms of off the bottom stuff, I got a lot of names for you. Not that they're not all buyable. In fact, few probably are, but just flagging them. So of some names that really got destroyed, so this is Bill.com. This is one of these things that went from 60 to 340. Okay, so pretty big run. And then it fell, whatever, I don't even know, but call it 50%. And then just you had this massive volume clue last week on earnings back to the 200-day line, and it's kind of added some gains here. Again, you're into resistance. There's all sorts of resistance. It's just come up 100 points. So it probably needs time, like the market, to back and fill. But again, you're just kind of flagging some of these tennis balls, the stocks that really have popped. Snap, I mentioned last week. I'm just mentioning it again. It's still, to me, it's still buried. I mean, way below the 200-day line. But just that huge turnaround last week, I'm seeing more stocks that probably have lines in the sand. Doesn't mean they can't fall 10 or 20% from here. Just like I said a few weeks ago, it doesn't mean these things can't rally 30 or 40% off their lows. But overall, that seems to be something just, the institutions are at least saying something to it. And then ServiceNow, I did mention this a couple weeks ago, but this is almost more something I'm just watching for growth stock sentiment. It's kind of right back up into resistance. It has popped above its moving averages, which is pretty good. It reacted well to earnings back here, liquid, good numbers, blah 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 blah. So let's see what happens. If you start coming in and this thing just keels over, not the best sign. But the longer it can kind of hold these gains, or this rebound, I should say, the better the chance that it's going to want to try to attack higher prices. Okay. And last but not least, I'm intrigued with I'm not a big turnaround guy, and I wasn't a huge, reopening guy, reopening economy play last year, because that trend can only last so long. I do, though, now think you're starting to see some stocks that have, I'm not calling them great growth stocks, but they have the bases, they have real stories, they're real companies, not just cyclicals, and now they're starting to pop out. So Expedia is reacting to earnings today. I'm recording this late Friday morning. I have no idea where it's going to end. But if it can hold up here, say north of 200 or 210 or something, it's certainly had a big move here, so it could pull back. But overall, basically, it's trying to break out of this multi-month base. And so far, anyway, the reaction to earnings, it's not bad. I'll put it that way. Planet Fitness, PLNT, I like this a lot. I mean, I just think it's got a great cookie-cutter growth story, a huge consolidation. And then it tried to break out here, but the market wasn't ready. And since then, it's just kind of been in this, call it a double bottom base or whatever you want to, consolidation between 80 and $100, which isn't bad at all. And it's got earnings on the 24th, so maybe that's a catalyst. So that's actually on my watch list. And then kind of in the financial space, Stifel Financial. This is exactly what you want to see. Yes, part of this is interest rates, but it's also kind of a bull market stock. It's not just like a bank. It's got a lot of brokerage services, and you can just see straight up a chimney here. That's really nice. And MasterCard, which in terms of big cap things, it's expensive, but it's got the sales growth, it's got the projected earnings, it's got the volume cluster after earnings. It's sitting around here, 5% from its high, maybe, 6% from its high. And it's not going to go and double in the next 3 months if the market gets going. But it does look like one of these sort of, I don't want to say liquid leaders, but one of these big liquid stocks that institutions could gravitate to, because it does have the sales and earnings and so on and so forth. And, has kind of been blessed by the market here after earnings. So overall, I guess I would say I'm encouraged. That was the title of yesterday's Growth Investor. I'm encouraged, but not bullish. You know what I mean? I think the action has been good. Barring major blast-off signals, right off the bottom, like we've seen occasionally in the past, this bounce is about kind of what you'd expect, which is, up, some things reacting well to earnings, things getting off their knees, but nothing that's really changed the trend yet. And obviously on an individual stock basis, not a ton of breakouts, some in cyclicalville and financials, but especially about growth stocks, it's going to take more time. So let's just see how it plays out. If you want to do some short-term trading, go for it. That's not really my game. If you want to try to buy some tiny positions in potential future leaders and see how it goes, go for it. There's nothing wrong with that. But in general, just bigger picture, when you look back a year from now, I still think the best thing to do is just be defensive, be cautious, be patient, let everyone else fight it out on a day-to-day basis. Okay. And while they're doing that, they're kind of setting the stage for some of these potential leaders of the next advance to form their launching pads, which they'll eventually get going from. But right now, again, it's kind of like picking up nickels in front of a bulldozer. We'd rather be patient, hold a lot of cash, maybe a little nibbling here and there, but for the most part, be on the sideline until a legitimate green light and some legitimate setups arise. All right. That's all the time I have for today. As always, thanks for listening, and come by again next week for another Cabot Weekly Review.